Every financial system you were taught to trust was designed with one silent rule. Minus keep most people just comfortable enough to never question it. You go to school, get the degree, land the job, open the bank account, and follow every step they told you, minus yet. Somehow, the finish line keeps moving further away. The wealth gap in America isn't a glitch in the system, minus. It's the system working exactly the way the architects intended it to work. In 1971, something happened that changed the financial rules for every working American, and almost nobody was told about it in school. That was the year the dollar was quietly untethered from gold, minus, and from that moment forward, the money in your pocket began a slow, invisible bleed. The people who built the modern financial system weren't sitting in classrooms, minus they were sitting in private rooms, writing rules that would last for generations. By the time most families realized wages weren't keeping up with prices, the gap had already grown too wide to cross. With a single paycheck, the average American worker today is producing more value per hour than any generation before them. Minus yet, they're taking home less purchasing power than their parents did. That isn't a coincidence, minus. That's the result of decades of policy decisions made by people who were never going to feel the consequences themselves. When inflation rises 2% a year, it sounds harmless, minus, but over 30 years, that quiet number silently cuts the value of your savings nearly in half. The savings account your bank promotes with a smile is earning you 0.5% interest, minus, while they loan your money out at 22% to someone else. That spread, minus the gap between what they pay you and what they charge others, minus, is one of the oldest and most legal wealth transfers in modern history. Credit cards weren't invented to help you manage emergencies, minus they were engineered to monetize the moment your income falls short of your expenses. The average American household carries over $10,000 in credit card debt, paying interest that quietly doubles the real cost of everything they bought. And the system never taught you this in school, minus because a financially literate population is a less profitable population. Think about the last time your employer gave you a raise, minus, and then think about whether that raise actually kept up with what groceries, rent, and gas cost that same year. Most raises in America are optics, minus they feel like progress. But when adjusted for real inflation, millions of workers are effectively earning less every single year. The term middle class was once a promise, minus a guarantee that hard work would produce stability, homeownership, and a future your children could build on. Today, that promise has been quietly renegotiated, minus, not with your consent, not in public, but through interest rates, tax codes, and asset prices you were never meant to fully understand. The system didn't fail you, minus it succeeded at something you were never told it was actually designed to do. The moment you were born into a working class or middle class family, the financial distance you had to cover was already measured in decades, not years. Generational wealth isn't just about money passed down, minus, it's about the compounding head start that turns small advantages into permanent gaps over time. A child born into a wealthy family inherits not just assets, but access, minus access to networks, legal structures, investment, knowledge, and tax strategies the average person never even hears about. The estate tax, the capital gains loophole, the stepped-up basis rule, minus these aren't accidents in the tax code. They are architectural features built to preserve wealth across generations. While working Americans pay income tax on every dollar they earn with their labor, the wealthy pay a lower rate on money. Their money earns minus, and that difference compounds silently for decades. In America, if you work for your money, government takes up to 37% minus. But if your money works for you, the rate can drop to as low as 20% or less. That single structural difference is one of the most powerful wealth-building mechanisms ever written into law, minus, and it was written by the people who benefit from it most. The stock market is often sold to working Americans as the great equalizer, minus a place where anyone with a brokerage account can build real wealth over time. But the reality is that the top 10% of Americans own nearly 93% of all stocks, minus meaning most market gains flow directly back to people who were already wealthy. When the Federal Reserve cuts interest rates and markets surge, the headlines celebrate minus, but the people celebrating loudest are the ones who already had the most to gain. every time a stimulus check was sent to working families during a crisis. 10 times, that amount was quietly flowing into asset markets, through mechanisms most people never saw. The news. Quantitative easing sounds like a technical banking term, minus. But what it actually means is that the government printed money and used it to inflate the value of assets, owned primarily by the wealthy. Your rent went up not because your landlord suddenly needed more minus, but because institutional investors, flush with cheap money, began buying single-family homes at scale across America. Between 2020 and 2023, corporate landlords and investment firms purchased hundreds of thousands of homes in American suburbs, turning the dream of ownership into a permanent rental market. The house you were saving for didn't just get more expensive, minus it got bought by a hedge fund that now charges you rent to live in the neighborhood you were trying to own. And when you fall behind on rent, the system doesn't offer compassion, minus it offers a late fee, a credit ding, and an eviction notice written by a legal team you could never afford to fight. The legal system in America is not equally available to everyone, minus justice in practice is often determined by who can afford the better attorney and who can afford to wait. Corporations settle lawsuits for billions of dollars without admitting wrongdoing, minus while individuals who can't post bail sit in county jail, waiting for a trial date months away. This isn't cynicism, minus these are documented patterns that show up consistently in the data, in the courts, and in the lived experience of tens of millions of Americans every single year. Understanding. This isn't about anger, minus. It's about clarity. Because you cannot navigate a system you were never taught to see clearly. The education system was designed to produce reliable workers, minus not independent thinkers, not investors, not entrepreneurs, but people trained to show up on time and follow instructions. 12 years of mandatory schooling, and most Americans graduate without ever learning how compound interest works, what a balance sheet is, or how taxes are actually calculated. That gap in knowledge isn't an oversight, minus a population that understands money is a population that asks harder questions about where it goes and who controls it. The financial literacy crisis in America is not a failure of intelligence, minus it is the predictable result of a curriculum that was never designed to produce financially independent citizens. When you don't understand how debt works, you sign for it, minus when you don't understand how interest compounds, you carry it, minus, and when you don't understand equity, you never build it. The student loan system is perhaps the most elegant trap ever constructed, minus it targets 18-year-olds at the exact moment they are least equipped to understand the true cost of what they are signing. You are handed $50,000 in debt before your first real paycheck, told it is an investment in your future, and then released into a job market that may not value your degree at all. The federal government now holds over $1.7 trillion in student loan debt, minus making it one of the largest creditors in American history, collecting interest from its own citizens. Unlike every other form of debt in America, student loans cannot be discharged in bankruptcy, minus a rule that was quietly changed in 1976 and has trapped millions of educated Americans in financial limbo ever since. The system didn't make education expensive because quality costs more, minus it made education expensive because debt is profitable, and young people are the most willing borrowers on the planet. Healthcare in America follows the same architecture, minus a system that generates maximum revenue at the exact moments when human beings are most vulnerable and least able to negotiate. Medical debt is now the leading cause of personal bankruptcy in the United States, minus not gambling, not reckless spending, but getting sick in a country that treats illness as a market opportunity. A hospital can charge $5,000 for a procedure that costs $200 in another country, minus not because the care is better, but because the billing system was built without a ceiling. Insurance companies sit between you and your doctor, making coverage decisions based on actuarial tables and profit margins, in a system where the patient is rarely the actual customer. When a working family faces a catastrophic diagnosis, the financial devastation often outlasts the medical crisis, minus because the bills arrive long after the body has healed. Retirement was once a social contract, minus you worked for decades. Your employer contributed to your pension, and the system guaranteed you a dignified exit from the workforce. That contract was quietly dissolved beginning in the 1980s, when pensions were replaced by 401k plans, minus shifting the burden of retirement risk from corporations directly onto individual workers. The 401k was originally designed as a supplemental savings tool for executives, minus not as the primary retirement vehicle for an entire nation of working people, living paycheck to paycheck. Today, nearly half of American adults over 55 have less than $50,000 saved for retirement, minus not because they were irresponsible, but because the math was never designed to work for them. The system told you to save 15% of your income, minus, but never mentioned that stagnant wages, rising costs, medical emergencies, and student debt would make that 15% nearly impossible to reach. The media you consume every day is not. Independently owned -6 corporations control roughly 90% of everything Americans read, watch, and hear across television, radio, and digital platforms. When the financial news celebrates a record-breaking stock market, they are not reporting on your financial reality. Minus, they are reporting on the portfolio performance of the people who own the network. The advertisements between every segment are not random. Minus, they are carefully placed messages designed to convert your attention into spending behavior that benefits someone else's bottom line. Consumerism was not a cultural accident. Minus, it was a deliberate economic strategy, accelerated after World War II, to keep money flowing upward by keeping working people focused on buying rather than building. The moment you finance a depreciating asset minus a car, a television, a vacation, minus you are paying interest to someone else for the privilege of consuming something that is already losing value. The average American spends over $300 a month on subscription services, convenience fees, and impulse purchases engineered by behavioral psychologists working for billion-dollar companies. Every app on your phone that feels free was designed by a team of engineers whose sole job was to maximize the number of minutes you spend inside it. Minus, because your attention is the product being sold. Social media didn't accidentally make you feel inadequate about your finances. Minus, that anxiety was engineered because people who feel behind are more likely to click, buy, borrow, and spend. The algorithm knows that financial insecurity drives engagement. Minus, so it feeds you images of wealth, luxury, and success at a pace carefully calibrated to keep you scrolling and spending. You were not weak for falling into these patterns. Minus, you were the target of some of the most sophisticated behavioral engineering ever deployed at scale in human history. The political system offers the same illusion of choice. Minus, two parties that disagree loudly on social issues while quietly agreeing on the economic policies that protect concentrated wealth. Lobbying in America is legal minus, which means corporations can legally pay politicians to write laws that benefit the corporations. And the average voter has almost no equivalent mechanism to compete. The top 1% of Americans spend more on political influence in a single election cycle than the bottom 50% earn in an entire year, minus, and that investment reliably produces returns. Tax reform, deregulation, trade policy, healthcare legislation, minus these decisions are not made in town halls. They are negotiated in private meetings between legislators and the industries they are supposed to regulate. The revolving door between Wall Street and Washington is not a conspiracy theory. Minus, it is a publicly documented career path where regulators become executives and executives become regulators. None of this means the game is completely unwinnable. Minus, but it does mean you cannot win a game whose rules you do not understand. Using strategies designed for players who started with far more than you. The first act of financial resistance is not investing or saving. Minus, it is understanding exactly how the system extracts value from you before you ever get a chance to build any. Every dollar you spend on interest is a dollar working for someone else's wealth. Minus, and the fastest financial move most Americans can make is not a new investment, but the elimination of high-interest debt. The second act is building income that does not depend entirely on trading your hours for dollars. Minus, because time is the one resource the wealthy cannot buy more of, but they have structured the economy so that the poor are always running out of it. Small businesses, digital skills, intellectual property, and fractional ownership are not get-rich-quick schemes. Minus, they are the legitimate on-ramps that exist at the edges of a system that forgot to close every door. The most dangerous thing you can do inside a rigged system is to keep playing by rules that were written specifically to exhaust you before you ever reach the finish line. Financial awakening doesn't start with a brokerage account or a real estate deal. Minus, it starts the moment you stop blaming yourself for outcomes that were structurally engineered against you. Millions of Americans carry a quiet shame about their financial position. Minus, a belief that their struggle is personal failure. Minus, when in reality, it is the mathematically predictable outcome of a system working as designed. That shame is not accidental either. Minus, a population that blames itself does not organize, does not demand change, and does not build the collective financial power needed to rewrite the rules. The wealthy do not feel shame about using every legal mechanism available to protect and grow their money. Minus, and neither should you feel shame about learning every legal mechanism available to protect and grow yours. Tax-advantaged accounts, Roth conversions, HSA strategies, real asset ownership, and income diversification are not secrets. Minus, they are tools that have always existed, but were never handed to you with instructions. The difference between someone who builds wealth slowly and someone who never does is rarely intelligence or work ethic. Minus, it is almost always access to information, and the courage to act on it differ intensely than the crowd. Community is one of the most undervalued financial tools available to working Americans. Because collective knowledge, shared resources, and mutual accountability can compress decades of financial learning into years. The wealthiest families in America do not make financial decisions alone. Minus, they have advisors, attorneys, accountants, and trusted networks working in concert. Minus, and building your own version of that ecosystem, however small, changes everything. You do not need to be wealthy to start thinking like someone who intends to become wealthy. Minus, the mindset shift comes first, and the financial shift follows it with time and consistency. Every generation that has ever broken out of financial limitation did so not by accepting the system's terms, but by understanding them deeply enough to find the spaces where the rules could be bent in their favor. The system is large and old and powerful. Minus, but it is not omniscient. It is not without cracks, and it has never been able to fully account for the human capacity to learn, adapt, and build in the margins. The information that was once locked inside expensive universities, private wealth management firms, and exclusive financial circles is now more accessible than at any point in human history. Minus, and that access is a genuine shift in power. The question is no longer whether the information exists. Minus, the question is whether you are willing to spend the same hours consuming it that you currently spend consuming content designed to keep you distracted. Every hour you invest in understanding money, taxation, ownership, and systems thinking is an hour compounding silently toward a future version of yourself that the system never prepared for. The generation entering the workforce today faces steeper barriers than any since the Great Depression. Minus, higher debt loads, more expensive housing, less stable employment, and a retirement system that requires near-perfect execution to survive. But this same generation has tools, platforms, global markets, and peer networks that no previous generation ever had. Minus, and the sanged. People who learn to use them with intention will write outcomes that the old system never anticipated. The system was never built for you to win. Minus, but it was also never built expecting you to understand it this clearly, move this deliberately, or refuse this completely to accept the story it told you about your own limitations. The most powerful financial decision you will ever make is the decision to stop being a passive participant in a system designed for your compliance. Minus, and to become an active, informed, intentional architect of your own economic future. The rules were written by people. Minus, and what people write, other people can learn, challenge, navigate, and one day rewrite. Minus, starting not with legislation or revolution, but with the quiet, unstoppable power of a single mind that finally sees the game clearly.